And we are live from Bloomberg's world headquarters in New York. I'm Shonali Bassick.
And I'm Tim Stenivek. Welcome to a special edition, a Thursday edition of Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And coming up, Bitcoin stumbles on geopolitical risks over the weekend, but we are back above the $100,000 mark.
And Circle stock, it actually does go down. It doesn't just go up. A little shaky over the last couple of days. Analysts see competition heating up in the stablecoin space.
And we're going to talk about stablecoins and the future of finance with Ethereum Co-Founder Joe Lubin. You're not going to want to miss that conversation.
That's all ahead on Bloomberg Crypto today. First, though, a look at how Bitcoin has fared over the last week. Over the last 7 days, up close to 3%, but we've seen quite the range over the last week, from around $98,000 over the weekend to highs of $108,000 just on Wednesday. Now, this drop over the weekend came in the wake of President Trump announcing the U.S. strikes on 3 of Iran's nuclear sites. It was actually the first time that Bitcoin has fallen under $100,000 since May. Since then, though, we have seen a steady climb higher as the risk-on mood has swept up markets. The NASDAQ 100 hit a new record this week. The S&P 500, Shonali, is up pretty close to a new record now.
I want to talk a little about the stablecoin world as well. Let's take a look at Circle. We're seeing some volatility after a more than 610% rally. You're looking at it at still more than $220 a share, a far cry from its IPO price. It was initiated, though, at Compass Point with a neutral rating because analysts say a wave of competition could complicate things for the stablecoin darling.
Another crypto critic souring on stablecoins is former SEC Chair Gary Gensler. He joined Bloomberg on Tuesday.
We have stable coins. They're called U.S. dollars, deposits, money market funds, and so forth. The only thing that these companies are offering is an alternative way to move dollars outside of the banking system, which means outside of sanctions, outside of any money laundering laws. And so that's the real risk. It could undermine the U.S. geopolitically.
Now let's discuss stablecoins and the next big catalyst for Ethereum with Joe Lubin. He's the CEO of Consensus and a founder of Ethereum. He joins us from the Permissionless Conference in Brooklyn. Joe, nice to have you on the show today. Thank you very much. I want to talk about stablecoins with you because, of course, since we saw that Genius Act pass the Senate, even Jerome Powell this week getting questions in Congress about the value of stablecoins moving forward. We spoke a little earlier today to the CEO of PayPal. He had mentioned that it's still going to be seen mostly when it comes to cross-border payments. When will this become mainstream, if at all, in the United States as an alternative to the dollar, if you see that happening?
Yeah, so I think it's mainstreaming already. We're really excited about the fact that most of the stablecoin projects are on Ethereum. Stablecoins are incredibly valuable for people around the world. If you're in challenged nations, places like Venezuela, Zimbabwe, it is essential to be able to access stable stores of value. And it's incredibly valuable for the U.S. to, A, have its lenders replaced by crypto stablecoin projects as China and other nation states pull back on investing in the U.S. And the ability to dollarize the world and keep the U.S. dollar politically strong, even while the U.S. is trying to weaken the value of the dollar to improve trade relations, is a game changer, really, for the U.S.
What's the value proposition when it comes to stablecoins for just a typical U.S. consumer who pays for things using a credit card or a debit card from companies such as Visa or MasterCard? What's its value proposition for them?
Yeah, so it's certainly less important for the U.S. consumer because there are lots of ways to pay for things that they need. But as the economy moves more online and on-chain, stablecoins represent the Numeraire of choice, stable store of value, and having people use on-chain wallets like MetaMask and participate in the decentralized economy is going to grow faster and faster. And so stables will be a big part of that economy.
Joe, I think, is it fair to say Ethereum has always been kind of like Bitcoin's little sister, right? A little lesser known to the wider American public. What is the new sell for Ethereum in this era for the people who don't know much about it and the value that it might have to the financial system when so many people have been flocking to Bitcoin?
Yeah, so Bitcoin has had first mover advantage. And it's really got a simple value proposition. It's a store of value. It's digital gold, decentralized digital gold. Ethereum represents the next generation of the internet, evolution of the internet and web protocols. Ethereum is Web 3, the re-decentralization of the World Wide Web. Ethereum's been building layers of enabling infrastructure for nearly a decade, trying to get scalable enough so that we can move applications onto decentralized rails. Builders are coming into the ecosystem now. Enterprises, financial institutions are now comfortable because it's now legal to do blockchain things in the U.S. With the new regime in the SEC and in U.S. government. Ethereum is now scalable enough, it's affordable enough, and it's usable enough so that the best and brightest entrepreneurs are going to be able to build applications of by and for the community rather than, as in the traditional economy or in Web 2, in an adversarial nature with their users. So it's going to be a game changer for how the world re-architects its systems.
Hey, Joe, I want to talk a little bit about cryptocurrency treasury companies, Strategy, the company formerly known as Strategy, and the like. Why do you think that prices...
Strategic bet?
Yeah. Well, why do you think of the prices of some of these cryptocurrencies, including Bitcoin, Ether, Solana, that have treasury companies supposedly buying them up lately? Why do you think they haven't moved very much?
Because there are lots of different factors that go into the price of these tokens, including things like wars. We're going to see an amazing amount of accumulation in Ether and Bitcoin. These things, to my mind, represent an element of the shifting of the monetary regime in the world. The U.S. will still maintain its primacy politically, and part of that is maintaining primacy for the U.S. dollar. And so these treasury companies, especially the Bitcoin and the Ethereum ones, will raise Bitcoin and Ether to the status of highest powered money because they are uncensorable and because nobody can take your Ether or your Bitcoin away from you. So we're going to see... Sure.
Yeah, I'm really curious about one company in particular. I'm sure you know I'm going to ask about SharpLink because, of course, that is where you have been serving as chairman. When you think about the Ether that SharpLink holds now, was it contributed in kind or bought on the open market? What can you tell us about how it's amassed its Ethereum?
So we raced to market. We knew we needed to go very fast once we identified the target company. And so we brought in a ton of investors. And we left a whole bunch of investors on the sidelines who wanted to participate but couldn't get things done in time. So A, it was done in US dollars. B, we're talking to lots of new investors with lots of US dollar capital and lots of Ether capital. So we'll see a lot of Ether moving into SharpLink very soon as well.
These treasury companies, crypto treasury companies, it all works when the price of crypto goes up, but when the price of crypto goes down, it can get really ugly. What kinds of companies are at risk of imploding if we indeed see a wide price fall when it comes to crypto?
Yeah, so it could get really ugly if you don't maintain prudent risk levels. SharpLink isn't leveraged. We may do some things that bring a bit of leverage into the situation. Convertible equity potentially. We will do bond issuance at low rates with long duration. We will not put the strategy at risk. So what you do have to believe is that there's a paradigm shift underway to a more decentralized economy, and that Ethereum will continue to be the global digital asset settlement layer, and then Ethereum will be a large component of Web3.
Consensus CEO and Ethereum co-founder Joe Lubin. Always good to speak with you, Joe. Appreciate you joining us. Do come back soon. Well, coming up on Bloomberg Crypto, Sid Powell from Maple Finance on his DeFi lending business and the push for tokenized equities. And access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
We set up Galaxy 2017 with the idea that institutions would finally come to the market, and they're here. And it's a really exciting time. We're going to get the stablecoin bill and then hopefully a market structure bill. And it's going to bring in TradeFi into this technology. We're going to see tokenized equities. We're going to see perpetual futures, which is a crypto idea, be brought into the US, both for crypto and for non-crypto.
Mike Novogratz last week on his predictions following the stablecoin bill passage. We're going to now bring in Sid Powell. He's co-founder and CEO of DeFi lending platform Maple Finance. And you heard Novogratz talking there about this idea that TradeFi could start to rush in to crypto, at least tokenized equities, things that are kind of more adjacent to finance than pure crypto, if you will. My question is, how much are you actually seeing it?
It's a good question. We've seen pretty good initial traction from things like tokenized money market funds. But I think one of the challenges, actually, we've also seen private credit come on chain. So Apollo launched their ACRED product. But I think one of the challenges is you're selling products to people who have a different risk appetite to traditional investors. And for the TradFi investors, they already have pretty solid access to these types of products. I'm very interested in, is there an angle for the inverse where TradFi investors might start getting into Bitcoin-backed lending, for example, like what we saw with Cantor over the last few months?
Why is that of interest to you? What's the opportunity there in your view?
Well, I think Bitcoin-backed lending, it's very short duration, it's higher yield than money market funds, and it's over-collateralized, so it's very well secured. It tends to be about 150% secured. And so if you look at it, it's a type of asset class that has high yield, relatively good liquidity, and it's not available elsewhere. So I think that's the interesting thing, is it's an exotic asset.
Well, one thing I think that's interesting, you kind of alluded to it. If you were tokenizing, say, private credit funds, like Apollo is doing, you're interested in the asset class, why wouldn't you just buy it regular way? Why is tokenization attractive to you if you could just kind of buy it as it were?
Well, I think that's one of the challenges that the industry is working through. And so
what's the point?
Well, up until this point, I'd say the angle for Apollo has been how can they distribute a product that they already have relatively good traditional penetration with to the new marginal investor who is on-chain, who uses DeFi protocols. And that's what they've done with ACRED. So they've got, I think they just crossed 100 million in funds outstanding there, but they're trying to sell it to the crypto native investor. So for them, it's distribution.
It's interesting. I was in Hong Kong a couple of weeks ago speaking to Apollo's head of the region, and one thing he was saying was tokenization is a big theme for Asian investors. They want liquidity. But I hear from other critics of the space too that say, well, wait a minute, just because it's tokenized doesn't mean it's going to be more liquid. What do you make to that critique?
I think to give a balanced view, I think the liquidity on RWAs has been less than what it could be, and probably less than what investors are looking for. Yet at the same time, because you can have secondary markets on DeFi and ACRED, currently can be used as collateral. So that is an advantage. You can hold this asset, continue to get a 10% yield on it, and then borrow against it at 5 or 6% when rates are relatively low on chain. So that is one of the angles for these investors.
When I hear you talk about lending using Bitcoin assets or yields as a result of people storing their Bitcoin in certain places, I immediately think of BlockFi and the blow up that happened in the crypto winter in the wake of what happened with FTX.
Yeah.
Is this
Very
time
valid.
different?
Well, I think
Is that not going to happen?
Well, I think risk practices have definitely evolved since then. So if you look at what happened in 2022, it was very much a black box. You put your money with these guys, whether it was BlockFi or Celsius, and you didn't really know what was happening on the other end. So you didn't know how the loans were performing, what the collateral backing was, or the equity backing, the cushion provided by a BlockFi or a Celsius. I think nowadays when you see this type of lending happening, we do all of our loans on chain, so you can always see the performance. We report the collateral backing of it. And I think the other element is people are now using more and more instances of tri-party custody. So you now have big custodians like Anchorage, like BitGo, like Coinbase Custody, and the Bitcoin's actually there. So you know that the loans have legitimate collateral backing.
So interesting on the Bitcoin lending. When Cantor kicked off this $2 billion lending initiative, you were actually one of the first companies to be on the other end of that. Is Cantor kind of the king of the castle here? You said other firms might start to get into it, but are they doing it at this scale? And who else are you in talks with that might be either as mainstream as Cantor or close to it?
Certainly certainly among mainstream traditional finance firms, Cantor is leading the way. They indicated they have appetite to do up to $2 billion of this kind of lending program. Of course, overall among centralized lenders, Tether is leading the way. They have about $10 billion outstanding. But what we are seeing now is we're having more conversations with traditional firms who might be commercial banks or alternative asset managers, and they are actually looking to get into the space.
Are you having conversations with David Sachs right now? Have you had conversations with him?
I have not had conversations with David Sachs before.
Have you had conversations with anyone in the administration?
I've had conversations with people in the Ag Committee working on the stablecoin bill and the market structure bill.
And they're listening?
They're definitely listening. So I've been to a few roundtables, and I think what's been very encouraging is they're looking to take industry feedback as to what might work, what is ultimately going to help crypto innovation in the U.S. and help the U.S. kind of maintain a lead.
Sid, we thank you for joining us here, of course, coming up from the Permissionless Conference down in Industry City, Brooklyn. That is Maple Finance CEO Sid Powell. Now, coming up next, Kraken is targeting Venmo and Cash App in a bid to broaden its borderless payment offerings. We're going to give you details on all of that next. This is Bloomberg. Out with news today that it's taking on the likes of PayPal's Venmo. The crypto exchange is developing a financial services app called Crack, which will allow users to send and receive both crypto and traditional currencies across borders at little to no cost. The app will also offer debit cards and provide services like loans and credit card programs. And it's interesting, Tim, this comes after Kraken has recently launched a plan to provide tokenized equities in Europe. We're watching to see whether they bring that plan to the United States. I will be speaking to the CEO later today. But of course, we were talking to PayPal was actually years ahead of some of its rivals in launching its own stablecoin business years ago. So the competition is heated, but certainly a lot of people are watching how these newer financial players are going to compete with the traditional ones in payments, if not broader banking services.
I'll be honest, you had me at Crack. I think that's a great name. It has a nice ring to it. Seems like it's going to work. I don't know.
No comment.
Seems like it's going to work.
We'll ask about the name later.
Let's bring in Uma Roy, the CEO and co-founder of Succient. It's a decentralized network for developers. It's backed by venture capitalists, including Paradigm, Bankless Ventures, Geometry, Robot Ventures, and more. Uma, good to see you this afternoon. Explain exactly what the protocol does, what the tool does, and really where consumers would have interacted with apps that are built using this system.
Yeah, for sure. So yeah, I'm Uma. I'm the co-founder of Succnct. We're building with zero-knowledge proofs, which are a frontier cryptographic primitive primarily used for blockchain scaling and also privacy on blockchains. And we power a lot of layer 2s on chains like Ethereum or even Ethereum L1. And really, consumers are interacting with the chains, and we're an underlying piece of infrastructure that kind of remains hidden and behind the scenes, but is helping scale all these protocols.
It's interesting. A lot of people who look at the incidents that have happened in the crypto world lately as it comes to security will kind of brush it off and say, well, these are human errors and maybe not chain-linked errors. What do you say to people who think that there are security concerns that are more human-led rather than technology-led? Do you think that that's a mistake?
Yeah, I think in crypto, because it is an environment that's permissionless and kind of anyone in the world can access it, it can be difficult in a challenging environment for protocols to operate in. There have sometimes been technical errors where engineers make mistakes. There's also been errors due to like human operator error, as you have mentioned. But I think overall, year over year, the crypto security landscape gets more and more sophisticated. And kind of as we see these bugs in more systems kind of be deployed and triaged, we can avoid repeating the same mistakes throughout time.
How specifically can Succient or does Succient make the space more secure?
Yeah, that's a great question. So today, there's this scaling solutions on top of Ethereum called layer 2s or rollups that some of you guys may have heard of. For example, Coinbase has a chain called Base that's a layer 2 on top of Ethereum. And today, a lot of the rollups are not really secured by much. It's just a multi-sig of a bunch of humans, and so you have to place a lot of trust in those actors. With Succint and zero-knowledge proofs, the technology we're building, instead of having to trust a bunch of humans, you can basically get a cryptographic proof that the rollup is kind of calculating all the balances correctly and processing the transactions correctly. And in the end, you get this cryptographic proof that gets verified on Ethereum, so it makes the rollup a lot more secure.
Really quickly, we have less than a minute here, Uma, but you were talking about the value of Ethereum. We were talking to Joe Lubin a little bit earlier, kind of acknowledging here that Bitcoin had a big lead. How much potential do you think Ethereum has to gain broader adoption? And again, just less than a minute, so got to be a little quick here.
Succinct, be succinct.
I think Ethereum, obviously, Bitcoin's done super well, but the Ethereum Foundation right now has really turned around, kind of acknowledged that they're in war mode, and they're doing a lot of stuff behind the scenes at the infrastructure layer, developer layer, and I'm very, very excited. It's a very exciting time for Ethereum over the next year.
Succint CEO Uma Roy joining us from Brooklyn. Do appreciate it. And that is going to do it for this special edition of Bloomberg Crypto on Thursday. Join us again next week. We are back on Tuesday next week. This is Bloomberg.